Hello traders, hope you're doing well. Today's video is very important because the concept which we will be discussing has the potential to change your current financial situation. By the end of this video, I am very sure that your perspective about investment and stock market will completely change. I will be presenting some important data right now which is very important for this session, so please don't skip this part. Traders, the COVID pandemic was very severe in India since March 2020. During this time, a lot of people started showing interest in stock market. This graph from Google clearly shows that very high number of people started searching for contents related to stock market during this COVID period. Now, if you look at the audience graph of this YouTube channel, around 80% of the people who are watching our content are between the age group of 18 to 45. I'm very sure this data is same across all other stock market related YouTube channel because I have personally interacted with 4 to 5 top stock market channels and even they have confirmed the same. In this age group, at least 85% of the viewers are working professional who are doing 9 to 5 jobs. Some might be students, but rest of them are doing some kind of salaried job. Now, why would so many working people at this age group show so much interest towards the stock market? The answer is very simple. They all have one goal in mind, that is to attain financial freedom. I can completely relate to this because even I was working in a corporate company for 3.5 years and very soon I realized that if I continued the same path, I would never attain financial freedom. Now, in a corporate company, to get the best salary and enjoy huge benefits and save a lot of money for our retirement, we need to be in the top of the hierarchy. But not everyone can reach the topmost position. Even the best working employees has very less chance to reach this level, right? Now with this view in mind, I quit my job. Now coming to the main topic, what can we do to attain financial freedom? The most common answer which you will get when you ask this question is save and invest, correct? But where do we invest? This no one tells you. So today, let us see the various types of investment available and I will share my point of view on each of this investment. Now everything that I speak in this video is my personal experience and my view about investment. Your opinion might be different from mine. That is completely fine. Traders, now speaking about types of investment, basically there are only 4 types of investment. Okay, all kinds of investment that you do will fall into any one of these types. In India, majority of the people are still following the conventional way of investment. If you ask suggestion for investment from many of your relatives or family members, the most common type of investment which they suggest to you is fixed deposit or recurring deposit, then saving bank interest. Majority of Indians are trying to make returns on their investment by following these 2 methods. In India, the FD return per annum is just 5% and saving bank interest is 4% per annum. Now, if you look at this website, here you have the bank details and you get to see how much rate of interest they are providing for saving bank account deposit per annum. Only few small finance bank is providing you 6% return. Now, if you look at this website, which shows top banks' latest fixed deposit rate of interest, you have all the bank details here, right? And you get to see for general citizens, this is the return that you will get on your fixed deposit, and senior citizens will be getting little higher than the general citizens. But most of our channel viewers are general citizens. Now, some banks here are giving you 6%, 6.2%. Now, please remember, FD interest has been falling consecutively for last over 5 years. Maybe again after 1 or 2 years, you will not even get this kind of returns. Now let me show you a quick calculation of what will be the return on your investment if you are investing 1 lakh rupees. So if you invest 1 lakh rupees with the rate of interest of 5%, I'm just taking an average. For 1 year, the interest that you will earn is 5,000 rupees. So after 1 year, your 1 lakh rupees will become 1,05,000 rupees. Even for saving bank interest, if you consider even 5%, there's the same kind of return that you will get. Now please remember, fixed deposit and saving bank interest that you receive, both are taxable. So this entire 5,000 interest also over a period of 1 year on your 1 lakh investment, you will not get. Now coming to the main question, is it worth putting your money in fixed deposit or saving bank account for interest for just 5,000 rupees return per annum? If you think this is a very good return, then you definitely have to watch this. Traders, the inflation rate in India is currently 7 to 8% for retail people like you and I, and for businesses it is more than 12 to 13%. Now what do I mean by inflation? Now those who want, you can read this definition, but in simple terms, if I have to tell you, inflation helps us to determine the change in the price of goods and services when you purchase it in the future. Now let us try to understand how is this inflation of 7 to 8% per annum affecting the purchasing power of common people like you and I. Let's see a very simple example. Imagine that in 2019, for 100 rupees, you were able to buy 1 liter of cooking oil. So in 2019, 1 liter of cooking oil was 100 rupees. Now due to inflation, almost all FMCG products will see a significant increase in the price. So in 2020, the same 1 liter oil will cost you 108 rupees because 8% of inflation. Now in 2021, it will cost you 116 rupees. In 2022, it will cost 125 rupees. This is just an example. I know the oil price now is very high, especially due to this Russia-Ukraine war, but I'm just giving you an example. Now due to inflation, the cost of goods and services will keep increasing year on year. This will significantly reduce the purchasing power of common people like you and me. Now, if you have 1 lakh rupees and you do not invest it anywhere, by the end of the year, the purchasing power of that 1 lakh will just be 93 or 94,000. So your purchasing power will reduce. Now, some time back I told you, if you invest your money in fixed deposit or you keep it in saving bank account, anyways you are making 5%. But inflation is 7 to 8%. So by the end of this year, even if your 1 lakh become 1 lakh 5,000, the purchasing power will not be so much. It will just be 97,000 or 98,000. Inflation is 8% minus this 5%. So balance is 3%. The 3% is your loss. That will get reduced from the capital that you have invested. It completely made sense to invest in FD or keep your money in saving bank account 5 to 6 years back. But that is not the case anymore. If you keep your money in FD or saving bank account, you're just losing your purchasing power because of inflation. If you want to keep up with the current inflation rate, for sure you should make at least 8 to 9% of returns on your investment. If an investment is not giving you so much return, then it does not make sense at all. So I personally will not put my money in FD or keep it in saving bank account. I just keep a very small amount of money in my bank account for emergency. Apart from that, rest money is invested where I make more than 8 to 10% minimum. Now traders, the second type of investment is housing. People strongly believe that if I buy a house now, over a period of time its value will appreciate and I can see very good returns, right? According to me, buying a house completely made sense before 2014. At that time, the return on investment was very good. Now this is the data which is published by Reserve Bank of India. This chart represents the momentum of house price index. You can see here from 2013, the cost of purchasing a house has significantly increased year on year. But the returns that we are getting by investing in a house is significantly getting lower and lower. Before 2013, 14 and all, when people bought a house, they could see 20-30% return on the investment. But currently, the appreciation value of a house is just 4.5%. Inflation is 7 to 8%, but the return on the investment that you're getting from the house is just 4.5% currently, which is comparatively lesser than the FD return, which is 5 to 5.5%. So rather investing in a house, I can put that money in FD where I'm getting 1% more return than investing in a house. Buying a own house is a dream for a lot of people. It is an emotional investment. But logically, if you are seeing, buying a house does not make sense now at all. You can also see this data. It shows home loan interest rate from banks in 2022. everything is about 6.5%. Some are charging 7% or 8%. Buying a house in full cash itself, it is not giving us good return. And if you go for loans, it's going to be very difficult. So does it mean we should not buy a house at all? We can buy a house. In the current market situation, we can go ahead and buy a house only when our EMI amount is equal to the rent amount that we are paying. So if the rent of the house which I'm currently staying, if it is 20,000 and my EMI is also 20,000, only then it makes sense to go for EMI. Apart from this, buying a house does not make sense at all at the current market situation because the housing price is very high, return is very less. A person who understands the inflation rate, he would not go buy a house, rather he will rent a commercial properties like this. Can you see here? There are 3-4 shops through which he can generate rent or passive income and things like that. Buying a property like this can generate new cash flow, not an independent house or a flat which you buy, right? So this is my thoughts on investing in a house. Now the next type of investment is gold. Traders, I was brought up in a middle class family where gold played a very significant role. Whenever we had financial problems, we used to pledge the gold that we have. We used to pay my college fees or any medical emergency. During that time, gold helped us a lot. Now at the end of 2015, I was still working in a company, but during that time, I got a business idea, but I was not that confident. So what I did was I kept a goal for myself where as soon as I make 300 grams of gold, I will quit my job and start concentrating on my business. But buying 300 grams of gold was not that easy with the salary what I was getting from the company. So what I did was every day after that 10 hours of work in my office, I used to come back home and spend additional 3 hours on my business idea. I did this for continuously 4 months and slowly I could see continuous revenue coming from the business. Now this revenue helped me to achieve my target more quickly. I think I took approximately 8 to 9 months to achieve this target. Around 70% of the profit what I used to make, I used to go and buy gold, and the remaining 30% I used to put it back on the business again. Now as soon as I achieved this goal, I quit my job. 300 grams of gold gave me the confidence to quit my job. Now as soon as I quit my job, I had so much time for myself. Half the time I used to dedicate in practicing strategies, reading books, analyzing patterns. Another 50% of the time I used to spend it on my business. Now without this backup of gold, I couldn't have become an independent trader. There are different ways through which we can invest in gold. The most safest way of investing is sovereign bond. These are the bonds which are issued by the RBI. How this works is you need to invest a fixed amount for a period of 8 years. Now for this 8 years, every year you will be getting 2.5% of interest, and when this 8 years complete, they will take an average of the last 3 days trading price of gold and they will release the fund. Most of the time when RBI issues sovereign bonds, they issue it at a discount where you get 6 to 8% discount when you enroll to this. I suggest you to do your research before you invest your money in sovereign bond or speak to your financial advisor and see if that suits for you. Now the second way you can invest in gold is through gold ETF. ETF means exchange traded funds. Just the way how you trade in stocks, you can trade in gold. You can buy today, sell tomorrow and all those things, but it is taxable. But here the advantage is there is no lock-in period. Here the cash will just get deposited to your account in 1 or 2 days. Now the third way how we can invest in gold is through paper gold. Now a lot of apps are providing this facility where you can buy even milligrams of gold. The advantage that we have in buying paper gold is there is no making charge because you're not physically taking the delivery of the gold. There will only be 3% GST when you're buying. Third advantage is online itself you can sell this and the money will get credited to your bank account, so you don't have to roam around to sell the gold in case of emergencies. But disadvantages, if you want to take delivery, at that time you have to pay the making charge, and I believe even when you want to sell this gold, again you will have to pay 3% GST. So please do your research about paper gold before you invest in that. Now the fourth and most common way how people buy gold is physical gold. You go to a jewelry shop, you buy the gold. You can physically see it, you can wear it, but when you buy physical gold, there will be a lot of making charges, wastage and other charges. If you are ready to bear that and your plan is to hold the gold for long term, then this can be suitable. So these are the different types of way how we can invest in gold. Now you would have to decide which suits you. Speak to your financial advisor before you make any purchase decisions. For your information, I personally, after making 300 grams of gold, have not invested in gold that much. Rather, I am investing on companies that is related to gold, like Kalyan Jewelers, Muthoot Finance, because I feel I get better returns there rather than this. Traders, the fourth and the most important type of investment is investing in stock market. From the last 20 years, stock market has proven to provide the highest percentage return on investment. Any person who has invested in the stock market with a long-term perspective in mind has seen significant returns on their investment. Yes, investing in stock market can be risky compared to the other three types of investment, but if a person understands correctly how to invest in stock market over a long period of time, the reward can be very big. From the returns which they get, they can easily beat the inflation as well as save for retirement. Now let's look into different type of investment opportunities that we have in the stock market sector. The first thing is mutual fund. Mutual fund can be of two types. One is active mutual fund, the other one is passive mutual fund. Now this active mutual fund is managed by a fund manager. Now the job of this fund manager is to give you better returns on your investment. So when you invest in active mutual fund, the fund manager will use various tools like fundamental analysis, technical analysis, and he will use the tools and resources that he has, understand the market and invest your money in various stocks in which he believes that you will get better returns on your investment. Now since this fund manager does so much work for you, he will charge a commission. The standard commission is somewhere around 2 to 2.5%, which is actually very high. If you see historical data, people who have invested in active mutual funds has seen 6 to 10% return per annum. Of course, it is better than FD and other type of returns, but is it worth giving 2.5% commission to this fund manager? If you ask me, the answer is no, because there are other ways through which you can get better returns and pay very less commission. Now, instead of investing in active mutual funds, if you invest in passive mutual funds, you will get better returns. Now you know active mutual fund is managed by a fund manager, but passive mutual fund is managed by a system. Now the money which you invest in passive mutual fund, the system will decide where it wants to invest. Since there is no a fund manager in passive mutual fund, the commission that you are going to pay will be very less. It will be somewhere around 0.2% or 0.3%, which is very negligible amount. If you check online, there are different kinds of passive funds in which you can invest. In that, I personally prefer index fund. Now what is index fund? An index fund is a mutual fund that imitates the portfolio of an index. The asset allocation of index fund would be same as that of its underlying index. Now in simple terms, if I have to tell you, now here there are different kinds of index funds. Let's say you invest in Nifty 50 fund. How Nifty 50 is performing, your fund also will perform like that. Traders, what you're seeing right now is the chart of Nifty 50. You can see what kind of growth it had from the time it started. So what does Nifty 50 include? It includes top 50 companies of different sectors of India. It includes automobile stock, pharma stock, FMCG stocks, banks, chemicals. Top 50 companies from all the sector is a part of Nifty 50. Now if I'm investing in Nifty 50 index, that means I'm investing on the top 50 companies of Nifty 50. If a company goes out of Nifty 50 and a new company comes in and I invest in passive Nifty 50 index fund, the system will automatically exit the position from the stock which went out and start adding position from the new stock without me doing anything. And I have personally invested in Nifty 50 index and next Nifty 50 index. If I'm investing in index fund, that means I'm investing in the growth of the country. Historical data of last 15 years is shown that when we invest in passive index fund, we are getting 11 to 13% return per annum, which is more than active mutual fund. what a fund manager could not do, the system is giving better results. This is more than any other kind of investment return. I'm not speaking about doing a business. I'm speaking about these 4 type of investment class. Investment is equity investment, where you are directly choosing the stock, you are doing the analysis and you are investing. Traders, I started my trading journey very early, so I love doing this. This is proven to give close to 15% return. But for this, you have to spend a lot of time analyzing charts, analyzing the fundamentals, all those things. For most of them, investing in index fund is a better option. Now traders, while speaking about mutual fund, index fund, I showed you different kind of companies, different websites, right? Please note that I'm not promoting any one of those. I'm just telling my experience and what I have done for long-term perspective. This is my view only. You would have to discuss with your financial advisor before you do any kind of investment. Now traders, I hope the content of this video was useful for you and you have got a better understanding about investment. If you want me to make any dedicated video of any one of these 4 types of investment, please let me know in the comments section below. It takes a lot of time for me to create such videos. If you enjoyed the content, please like and subscribe to the channel. Don't forget to press the bell icon. If you think this video will be useful for your friends, please share it with them. Now that's all for this video. I'll see you in the next one.